Happy Friday, everybody. Welcome to the TraderMerlin Show. Yes, it is a very happy Friday. Cheers to everybody out there in our trading world. For those of you who are confined to the equity markets and the bond markets and the stock markets and the option markets, the market is closed. Cheers to a happy weekend. If you're like me and addicted to the crypto markets, well, you'll just die of insomnia because the markets never close. So it was a great week out there for me. I hope you guys had a great trading week as well. Now, today's going to be a little bit different show. Normally, I do Fridays all by my lonesome, but you know what? A good friend of mine called me and he goes, hey, love to come on your show and talk about some volume profile stuff. I said, volume profile? Is that like market profile? And he goes, well, you know, there's some similarities. I thought, you know what? I always love it when we can get someone to share a perspective on a tool, a technology, a strategy, or something like that. Whether it's amazing for you or not, it's just food for thought and maybe something that you can take a peek at. Today we're going to talk about trading using volume profile. My guest today joining us from the great state of Florida. Don't hold that against him, folks. We got Mike Siewruk joining us today. Mike, how you doing?
I'm doing great, especially since I'm in the tax-free great state of Florida.
Oh, yeah, but see, I don't have it where in Florida, you have it where you guys, we can go to Google and type in anything crazy and then Florida, and it always is Florida. You just got the crazies down there. I mean, people give California a hard time, but come on, man. You guys are nuts over there in Florida.
Well, that makes it exciting.
Yeah, you're right.
Who wants to live a boring life?
All right. Well, we'll let you slide on that one. Yes, by the way, I am wearing a 49ers jersey, completely dismayed by the Trey Lance pick that the 49ers did, but we won't make this a sports show today. Still showing my colors for the green or red and gold. Talk to me a little bit about this volume profile thing, because I've heard of market profile, which is something that a lot of people look at and they're interested in because it gives them clues to institutional footprints, etc. But when you and I talked, you went, it's a bit too much, little complex for what you want to look at. So what's with volume profile?
Okay, so let's start with the basics. When you're trading anything, there are only three variables you can look at. And I'm going to set aside fundamentals and sentiment. Just three variables on the chart. There's price, time, and volume. If you're not including some kind of analysis of all three of those, you're just not getting all the information you need. Mm-hmm. And so I like chart patterns. I like some technical indicators, but I like volume a lot because especially if you're trying to find institutions, there's got to be volume there. Mm-hmm. And so what I did was I took market profile, which, I read a couple books, even hired a guy who kind of trains on it. And it's a very complex system if you do it the way that Stottlemyre, who invented it, says to do it. And it takes a lot of effort, takes a lot of time.
For market profile.
Market profile, yeah. So I said, you know what, really, I don't need to be this complicated about it. Really, all I want is to marry up where is the high volume price on the chart with my other strategies for getting in and out. And so I doctored up an indicator for TradeStation, and I'll show it to you guys in a little while when you tell me. But
whenever you tell me, if you ever want to go to it, just say let's go to the charts. But we'll show you guys.
Well, then go to the chart now because it'll be easier to explain.
Now, real quick, before we get going, for those that don't know, what he's talking about is this indicator that's the colored bands there. Obviously, you've got price on the right-hand side. Market profile is not as visual or user-friendly. It's a whole bunch of letters, and we're not going to get into volume or market profile per se, but this, to me, seems like a much more visual representation of market profile.
Yes. Yeah, in fact, there's other indicators out there right now that you can license or buy, and every one of them is endeavoring to do exactly what I did here, which is simplify it so that we don't have to, think too much. And you got to remember, when market profile was invented, we didn't have the technology we have today.
Right.
All this can be done now with the software. So is my screen live?
Yeah, you're good.
Okay, so let me just show you here real quick. This panel, this window right here, this is the S&P futures. And we're looking at the last 2 days. So you'll see the green candle over here and the red candle over here. Those are the daily candles. Most of the time, if you go over to this chart of the daily, your volume is a histogram at the bottom. Mm-hmm. And that's helpful information. It shows you how much volume happened in a time interval. But really, for the purpose of getting in and out of the market as an intraday trader, in fact, you can use this for swing trading too, but let's just keep it intraday for the moment. I really want to know, where was that high volume area? Because what happened there was all the orders were filled. That's what in market profile, they call that a balanced market. In other words, buyers and sellers are happy with the price. When you see the market go vertical, like down here with very little volume, that's considered an imbalanced market. And essentially, this particular one obviously went up because here's the bottom of the candle, and then it started to run into a little bit of fair value there. The key to doing this is simply understanding that these big volume levels are very nice reversal and breakout levels on a chart. Price will generally move pretty fast in a direction when the volume is like this, because you don't have a lot of people agreeing. But as soon as you run into these vertical bands that they agree that this is a fair price, you're likely to see a choppy sideways market for all that volume to get filled. And you know that what we don't want is a choppy sideways market. We want a market that actually is imbalanced and runs for a little bit. Mm-hmm. So that's the theory behind market profile and volume profile. Now today, I just got to be frank with you, this is a really sloppy volume profile. This is a tough one to gauge because it's so much volume in such a wide range. What we really like to see is something like this, 4 or 5 point range, mm-hmm. a lot of volume, and then boom, short here, come all the way down, go long up here, go all the way up.
So you're kind of looking for go from peaks to peaks, right? So when we look at the horizontal, the width of those bars there, that's telling us how much volume is there. So something that's very close to the flat line on the left, basically saying not a lot of volume transpired at that point. What are the colored bands? Because I've got gray, I got green, red, and blue. Is there a distinction that makes that maybe more valuable than something else?
Well, when I programmed this, I wanted to understand. I look at time of day analysis a lot. So the gray bands are the Globex session.
Oh, great.
And the bright green bands are the morning session. The blue is lunchtime and the red is afternoon. And all I can tell you is, and I'll share this little filter with everybody, this stuff doesn't work real well after 2 o'clock. So it's a great indicator for people who want to trade in the morning and then go fishing or golfing.
Or anything really. So it's interesting. When you talked about today's action, comparing it to yesterday. Obviously, yesterday on the S&P, we had a pretty nice up day, a pretty solid green candle. Today was, the flip side of it, where we had almost the exact opposite candle, red finishing near the lows. And for yesterday's, it looks like we rallied up, and then at some point, right around that 4,205 mark, there was a lot of selling coming into the marketplace. Now, let's assume that happened, early in the morning. Would you look at that when you saw the really large spikes of volume out there, really high at 4205, and say, you know what, there's so much volume going on there. If it starts to turn, then I'm looking for a shorting opportunity back down to the peak in blue there?
Yes.
Okay.
You're smart, but this is real
It's the whiskey, buddy. It's the whiskey I got going on
here. Okay. Yeah. Yeah, that's it. We just look for these peaks and we try to play between them, because it's pretty well agreed upon in the world of market profile that when you have a profile where there's very little volume for a long way, that price generally moves through that smoothly. Mm-hmm. And, as directional traders, that's exactly what we want. Now, having said that, I just want to caution, there's no magic in the world of trading, and these things fail also.
Yeah.
But but that most of the listeners probably know that.
I think one of my favorite lines ever is everything works until it doesn't. And all you're really trying to do with this tool is give yourself a little bit of an edge and identifying, at what price points the big volume comes in. A lot of people call it VWAP, volume weighted average price. It's similar in that regards, but this I think is just a clearer, better looking visual piece. That's it. It's just saying, like on today's action, if I see this big block of red coming near the bottom, like, maybe I'll think about going long at 2180 or 2175 because I'm seeing a lot of volume there, a lot of interest in that point. Although, as Mike points out, it's a little sloppy. It's a big range, whereas the day before, we're much more focused. Right around that 4205 mark, it was pretty solid buying coming in there. That could create better turning points. The challenge is this is not infallible. It's not going to be perfect every time, and it's just an odds enhancer.
Yeah, well, everything's an odds enhancer.
Yes.
Chart patterns, you have to have what I call, and we talked about this last time, a confluence of evidence. If you have a few things that are saying, hey, you should do this, well, then you got better odds. But there's one more thing about these that's interesting is if you just look at this profile here, it's very vertical and then kind of fat over here. They call this a P because it looks like the letter P. That's very bullish.
Right.
This they call a B because it looks like a lowercase b, and that's bearish, right? But let's go back in time and see if we.
So wait, if that's a P and that's a B, does that mean that we just made a peanut butter and jelly sandwich?
Yeah.
Is Jay tomorrow? Is Jay going to be Monday's trading?
No, there's no J's in trading because that would have to go back in time, and that would be cheating. We can't know what's going to happen.
All right, fine.
Yeah. But I'm looking for one that's now. Here's another P. Here's one. Here's one that's not too interesting, but I'll comment on it. Volume, little bit of a hole. They call these areas a hole. Okay, HOLE. And so if you break out from here, the expectation is you're going to get down to here.
And it really looks, if we look at the candle, which you guys can see, it's on the left-hand side of that histogram, it's an indecision day. You had a long topping tail, long bottoming tail, the small real body. Hey, we always talk about it when we have those types of patterns, even the one the next day, it's a sign of indecision. I think the volume really just clarifies that. There wasn't any real direction like that one. That had yesterday's, there was some pretty clear direction there, right? You can definitely see
absolutely.
the range. Really peaking out with volume near the top. Today is a little obscured because the big block of volume near the bottom, but some of those other ones you can see really just ugly, not giving us a lot of info.
This was the S&P futures. Let's move over to Apple just for fun.
All right, Apple it is.
So you take a look at Apple. Yesterday was a big down day for Apple. Look at how fast, the very, very little volume up there, right? Mm-hmm. Apple dropped extremely fast, and then what did it do? It stopped right around 134 and a quarter, 134 to 134.50, and massive volume was filled. That means there was a lot of buyers and sellers who agreed that was a fair price. But up here, nobody agreed it was a fair price. They were pushing it down.
Mm-hmm. Or just sidestepping, basically just backing away from it, like I'm not interested. Which is typical after an earnings announcement, which is obviously that's what the earnings announcement was.
Now, let me give you a little tip here. When you take a look at today with Apple, the biggest volume area is important, no question. But these little spikes can be turning points as well. And if you notice, the high today was right here at this little volume spike. Mm-hmm. So when we trade at in my trading room at dailymarketforecast.com, we have these levels separated into critical, secondary, and then tertiary. And we have separate rules for how we trade each of them.
To entertain our crowd here, particularly Brendan, who's with us, can you bring up the Bitcoin futures, BTC?
Yeah. Curious
to see what that looks like. Just because, it's a hell of a day on it, and I agree with Brendan. It looks like we're poised for some big gains this weekend, given the momentum. There you go. Nice 7% gain today. Just curious what this is going to look like. You obviously have a really wide range.
Yeah, so you got to kind of I've never looked at this asset this way. This is interesting.
It's interesting. I mean, right now you're seeing it. It's stuck right now at 57,000. I mean, we're basically it's struggling, but notice that the volume is really spiking up on that level there. So there's a tug of war going on at 57,000 for sure.
Well, I can tell you this: if it drops down to 56.5, it has a likelihood of popping up.
Mm-hmm.
You see that?
Yep.
That was a big area of interest. Let's go back. Here's one. We came down hard the other day. You had a lot of volume in this area, and what happened? It dropped from that area pretty substantially. It did pause at this. See, this is a 24. This market trades way more volume at night than what futures do.
Sure. I mean, it's something that this is a truly global asset that's traded 24/7. So
yeah. Now here's one. Let's see. Let me get this down here. Can't get it. Anyway, here was the high up there at 57-ish, I guess. Not a whole lot of buying interest all the way down to 55.5.
Yeah, so that's what that was. What, yesterday or 2 days ago? Yep.
Yeah, the 28th, right? Yeah.
Nice.
Since you're a crypto guy, I think I got Ethereum futures here too. Let's just take a look.
They're thinly traded. There's not a lot of volume. So guys, this is something that you'll have to just deal with until we get to that point that the futures markets are more robust for these assets. And just for everybody's memory, we do officially have on Monday morning Bitcoin micro futures going live, which means you'll have a whole lot of new retail people in here in this space. But you can tell that the picture here with Ethereum doesn't quite look the same as some of these other ones. It just is lacking a lot of volume for now. It'll get there eventually.
Yeah, so what I just did was I changed the indicator for the S&P, and for high volume assets, I always look at 1 minute intervals. So if you take a look here, a 1 minute interval on Ethereum is really unreadable.
Yeah.
But if we go and say, all right, well, if that's no good, maybe we should look at a bigger time span, say 10 minutes, and that'll just create more volume in areas, you see? Mm-hmm. By just adjusting the time, we can see more volume on a low volume asset.
Right. It just helps aggregate, it just helps, you're bundling the time, kind of like looking at a 1 minute candle versus trading a 15-minute candle. You're fitting a little bit more information in each of those candles so you get a clear picture.
Right. This is just visual. I'm a visual guy. I learn visually. I really respond to these kind of things. And so it's designed to be flexible to whatever asset volume you are trading by adjusting the time. Yeah.
And this is something that that you use in your trading room. It's a modification of a couple different things, right? I'm sure that they could be using something like volume weighted average price or even market profile if you wanted to take the time to look into it. But this is something you've custom created, correct?
Yeah. I just took a basic activity bar that was really clunky that TradeStation offers, and I recoded it. I spent some time learning that. Now here's an interesting one. This is oil, futures on oil. Notice where the high volume was yesterday, and notice where it peaked today. Now that happened in the Globex. The opening of the day session on oil was way down here. Oil gapped down quite a bit. Well, not quite a bit, but about almost $1. Yeah. And now going into Monday, you would be very focused on this 63.50 area.
All right.
And you'd want to buy bounces off of that or short sell breakdowns.
And one thing that I think is interesting here, and I have to be careful because part of the Federal Trade Commissions, who personally I think are a bunch of idiots, the statement they made is we can't even use words like set and forget. Which is an industry standard term. It is clearly an industry standard term that every organization, including TradeStation, Charles Schwab, every organization uses it, but now OTA cannot use it because it's promissory in some way, shape, or form, which makes no sense whatsoever. However, that said, if we look at this chart of crude oil, for example, and maybe correct me if I'm wrong, Mike, but if we look at what happened today, you can see clearly aggressive sell-off in oil. It's earmarked by the Globex session. You can see really all gray until it started with the color bands. Then you have this mountain, if you will. I mean, this looks like the Matterhorn of Disneyland right now, right around 63.50. Is this something that if you were a full-time employee and you couldn't watch the charts all day long, that you could go out there and say, look, I'm okay going to buy at 63.50, maybe put a stop loss down below that grid on this, which is probably below 53, and start to do set and forget orders on that?
Yeah, it's exactly what I do every day in my trading room. See how I just put a couple lines around this area?
Yep.
What's going to happen if we were trading oil on Sunday night when this opens is that we would be buying around 63.60. If it was above there, we'd be shorting 63.46 if it was below there.
Yeah. Nice.
And you know, like I say, nothing works all the time. That's why the most critical thing any trader really needs to do is focus on risk management. It's number one, you know.
And you know what's nice about this is, and I think everybody can appreciate this one. When you look at this chart, it doesn't matter what this is, right? Is this oil? Is this wheat? Is it soybeans? Is it Apple, Microsoft, Intel, Facebook? Who friggin' cares? It's basically saying whatever security this is had a huge amount of transactions happen right around 63.50. Therefore, you already have a little bit of an odds enhancer in knowing that the amount of transactions that happen at that point give you a slight edge. Not that it could not knife right through this on Monday's trading and go straight down to $50, but it is just a point to give you a little bit of an edge in planning out your trades. I think the key here, which Mike did perfectly, is mapping a little, zone around that area and say, okay, that's my point where I'm either going to be going long or going short. Therefore, I can now plan out stop losses, etc., and have risk management in place in case you're wrong.
Yeah. Now, here, as you bring that up, I'll show you another trick that you can use this with. Let's say that your other strategy that you used for entries had you shorting this asset at 63.80. Let's say there was a little chart pattern there of supply, OTA supply, and you were supposed to go short at 63.80. Well, by knowing that there was massive balanced buying and selling going on here, and that the likelihood of it penetrating that was low, you can use it as a filter to say, no, I'm not going to trade.
Right. Yeah, you go, if you're shorting at 63.80 and you realize that it's probably going to bounce at 63.50, you got 30 cents worth of meat on the bone. Is it worth it for you?
Exactly. Is it worth it?
And I know very well that one of the biggest things in trading is actually not doing anything. I mean, that's the true sign of a professional, and discipline is looking at that going, 30 cents, I want to take the trade, but it's just not enough in it for me. Next, move on.
Yeah. In fact, in my room, I always make the statement. I say, look, you don't have to trade because the markets are a never-ending parade of opportunity.
Right.
Just the fact that you're not getting in right now means nothing because we miss great trades every minute of every day. We don't know it. Why get bothered by it?
Right. Yeah, it's like being a single guy or girl in Palm Beach on spring break. Don't worry, there's plenty of opportunities.
Maybe Fort Lauderdale. Palm Beach is not quite the same.
It's not what it used to be? Well, it shows you how old I am.
Yeah, Palm Beach is Trumpville, That's all
right, well, we'll stay on that one. All right, so for you, is this, if you had to rate what percentage of, on the scale of 1 to 10, 10 being that this is exclusive all you do, what would you put your emphasis on this tool as far as helping you establish your trades and your risk management?
Well, for those who have been around Online Trading Academy, you know that there's something called core strategy. And I used it and taught it. Hey, I was with the company for 12 years. But the thing that always bothered me was there was no reference to volume. And it is one of the three variables. And to not look at all three of them didn't make sense to me. And that's how I got to this. So, but what happened was I keep track. I have a very detailed review process. I actually capture 43 data points on every single trade, whether I took it or not. So I've got this massive database of 8,500 trades, setups, and results with a lot of information. And so what I came to find out was that this is my core strategy, is locating the volume. Everything else is the odds enhancer. So I'm not going to give it a number like 8 out of 10 or whatever. I don't know how to quantify that, but But this is what I look at first.
Nice. No, I like it, and it's this is where I find it interesting because everyone has different things they look at and different rules and different structures. And in looking at this, I can see that it probably would be fairly impactful in your trading decision. And I think for those that are maybe a pure OTA grad looking at supply and demand, I think where you start to get that real advantage is, let's say, for example, you found a real solid supply or demand zone based off of some historical chart, and now you have a situation where that price, you're seeing the pattern here with volume profile. You have confluence, and when you're using multiple indicators, stochastics, Bollinger Bands, whatever they might be, and you start to get confluence, meaning the indicator as well as your supply and demand zones, as well as other pieces are all saying, hey, this is the point to be buying or selling, then all of a sudden you feel much more confident in your trade, and maybe you increase your share size at that point. But confluence is something that I'm certainly a huge fan of.
Yeah, absolutely. And but by the way, for 12 years at OTA, I blogged at Power Trader Nation, these levels.
I remember.
I had that was an odds enhancer to core strategy that I offered up to all the students I was helping. So there's no question that confluence is more important than any one thing you run across, right?
Absolutely. Yeah, the sad part, Mike, is you have so many people all saying that what they have is the answer. And the truth is there is no the answer. They're all small answers to the bigger question. And if we start to stack them all up, then, ultimately, we hopefully get the answer that we're looking for. But there isn't one thing out there that's going to make you the money. It's not like some, buy one indicator and go. Interesting question here. Medic Man Down. That's a great question, and I wondered that myself when I was watching this. He says, what about Forex? Volume isn't reliable. Now, my assumption is going to be, before I let Mike answer this one, is he's not looking at the spot Forex market because, as we know, it's decentralized. You don't get a good read on volume. However, if he is using currency futures, you do have a centralized exchange. So do you feel it works with the currency futures?
I don't trade them, but let's go ahead and pop up the euro and see what happens. Well, there you go. Here was your high volume level yesterday with the euro. How much did we go through it? Just a few ticks. And that was the high of the day. This is actually pretty interesting.
Yeah.
You come down here. This looks today looks like the S&P almost, but yeah, right around 100, right around $1.20 is where we find support on the euro.
Yeah.
So that's futures, and the volume isn't as much, but your question was correct. It's the Forex market's decentralized, and there is no collective volume that we can find.
Mm-hmm. Yeah, I'm not a fan of using volume in the spot Forex market, as Jerry just posted in chat, because it's just unreliable and useless in my opinion. So, this is again one of the reasons a lot of people like to use the futures market to trade currencies. Which, hey, I have no problem with that. The big challenge is you don't get the leverage, right? 50-1 in the U.S., maybe 500-1 over in Europe. That's great leverage, but for anybody who's traded for a long period of time, you know that is an absolute double-edged sword. And if you don't know what you're doing and you have 500-1 leverage, I may as well just say my goodbyes to you now, because you'll probably blow your account much quicker than you'll make any money.
Yeah, I gotta tell you, the brokerage industry, even in futures, offers people more leverage than they should take.
Yeah.
I truly believe in the fixed percentage risk management system where you pick a percentage, 1, 2, never more than that on any one trade. And sometimes that's even too much.
Yeah.
I mean, you could go, they have day trading volume margin, in the futures market where you can blow out your account in a couple of days.
You'd be done by the end of the day, man.
Yeah, not okay. So leverage is great, but it's got to be moderated. It has to be, you have to use common sense with this, because like I always say, if I'm an engineer and I lose my job, I can go get another job. But if I'm a trader and I blow out my account, well, then I'm not a trader anymore.
Yeah. Yeah. Well, yeah, I mean, and I guess the saving grace is you've done this for so long that you understand that. And it took me a while to understand that as well. I mean, when I was starting off, I had, believe it or not, unlimited margin because there wasn't the rules in place yet. We didn't have all the regulation and SEC saying, hey, you can't offer that kind of margin. So I had unlimited margin, which is the reason I have vitiligo on my face, actually in my hands and other places, is because of stress related to having too much margin at one moment in time. Ooh, I want to look at that chart.
That's gold, baby.
Yeah, that's gold. Let's go to gold here real quick. And this is, again, what I was talking about. You had today in particular a very narrow range, condensed, kind of packed day on gold compared to what it did yesterday. And that, to me, again, is a sign of indecision. And it really could be used as a turning point for the next trading session.
Yeah, that's exactly what I do with it. Is I look at like going Sunday night into Monday. This is an area right here on gold that is to be avoided. It will likely chop sideways in that area. Now, if it breaks out above 1770, jump on it long. Look at this. There's no significant volume all the way above. And the same thing with 1766. Go ahead and short it. Bang. Now, I'm not telling you it works every time. I know I already said that, but it can be seductive to look at these charts and start to see, yeah, I see that. I want to do that. And I just want to make sure everybody understands risk management still first. And this is just a helpful tool.
Well, you know, it's I like that you put that little band on there on the gold, and it's similar to what I was showing yesterday. We had a listener ask about a breakout trade on the Nasdaq, and I think I still have that one mapped out here. You guys can see on my screen that, you know, Nasdaq is still within that range for 2 weeks, 3 weeks. It's been bouncing between 13,700 and let's go. I'll pull it down so you guys can see the actual peak there. Call it 1450, and it's stuck in the middle of it right now. So your odds are stay out of it until it moves one direction or the other. And I think that's the point he was trying to make there with gold is you have a situation where, trading it inside that range on gold, no, not high odds, not the greatest one, but could we be using that one as a bounce point on a breakout trade on gold outside that range? Absolutely. And again, it's having rules in place and not getting overly excited about a specific trade setup, watching it, being logical about it, saying here's the pieces why I'm going to go long at this point or go short at this point. Here's my stop losses, and then it should be an unemotional piece.
Yeah, I'm waiting for some data here. I switched to a weekly chart of the Nasdaq so that we could see.
There we go.
It's not working.
Wow, It could take a while. You're pulling a lot of data.
Yeah. While we're waiting for that, I just want to introduce everybody real quick. If you go to the website, Daily Market Forecast, I have an email list. I send out 2 turning points freely every day. So all you got to do is go in, sign up, and you'll get an email every day with a couple of S&P turning points so you can kind of practice with it.
Cool.
Right? dailymarketforecast.com and see how you like it. Maybe hell, we did in Tally in March. If all you did was sign up for the free email every day, I think it was about 110 S&P points to the positive. Okay. I don't know if you're trading micros, minis, or what, but 110 points is a nice month.
Beats a sharp stick in the eye. Real brief before we wrap up here. You mentioned it just a second ago, you guys. If you go to his website, which is the Daily Market Forecast, I've got it up here for you. You can get a whole bunch of free information. He sends out daily little market picks, so you can go free sign up there. He's also got some video lessons as well. Real brief, you mentioned before the show that there was you work on a bunch of indicators. You like working on indicators. You're a little bit of a geek with regards to TradeStation. And maybe we'll do a specific show on this down the road, but high level gaps. Gaps are something you like to look for as well, and you have some tools that you like to use.
Yeah, I'm real excited about this. First of all, let's talk about, just for a moment, anytime you get into a strategy development, if you want to develop a trading strategy, the first thing you got to do is make sure you're not just letting math fool you, right? You've got to make sure there's a real world reason for it. So gaps are interesting to me because gaps happen every single day.
Yep.
And wonder what's going on here. I'm missing there we go. So if gaps are happening, it's not hard to find stocks that are gapping up or down, right?
Yep.
I mean, there's all kind of scans for that, but what I did is I took and I wrote an indicator that shows you statistically and definitively whether you should be fading the gap or running with the gap. It looks at the historical performance of every gap of that asset and says, oh, by the way, you're going to, Roku gapping down will close the day green 80% of the time. What does that tell you?
It tells me that I'm glad the computer's doing all the work, because that's a dump load of data I don't want to have to analyze every single day.
Yeah. So we'll do a show on it, because I got a lot to share on that one.
Yeah, sounds good. I'm looking forward to it. Yeah, when you mentioned that, I was like, ooh, I bet these guys are going to love that one. All right, Mike. Well, hey, thank you so much. I love you coming on for the weekend. I hope you have a great weekend. Are you doing anything fun this weekend?
Yeah, not this weekend. I'm just going to do my normal thing. It's a beautiful weekend. I'm happy to be here and have a cocktail while I'm working. I normally don't do that.
Well, cheers to that. I usually save that one for Fridays, and I'm glad that you're the guest on the show. A lot of times when I do the show by myself, I end up drinking 2 glasses of whiskey, and these guys give me a hard time. They think I'm drunk on the show. I'm not, by the way, guys.
Yeah. Well, the truth is that the way my trading room works is we have 2 Zoom sessions every day, one at 9 a.m. Eastern to set up the cash market, and then one at 5:30 to set up the Globex market. So I always want to be a candidate here with Merlin, but the only day I can do it without conflicting schedule is Friday. So works out for me. Perfect. I get a cocktail too.
Excellent. Well, next time we'll get some videos so we can virtually cheers ourselves. We'll get you back on in May to talk about maybe this gap indicator, how you like to utilize that one. But thank you for sharing a volume profile with us today. We appreciate it.
Thank you so much, everybody. Have a great one.
All right, take care. Guys, that was Mike Siewruk. He's got a ton of information, education as well. I spent many moons teaching with him at Online Trading Academy, and as happened, a lot of people have gone off and done their own things. Thank you, FTC, for all that wonderful work that you did. I'm saying that extremely sarcastically. It'd be nice to have everybody under the same roof and same family still, but you know what? There's different strokes for different folks, and we move on. If you want to know more information, you can go to the Daily Market Forecast. That's his website out there. Talks about market turning points. You can click there for some free sign-up information as well. Now, I see a bunch of conversation pieces here. Especially, where's the one? Forex black boxes. I don't use any indicators like moving averages or MACDs. Doing okay without them. Absolutely. And here is the challenge that happened with me early on. And the regular viewers, you guys know these stories because you've been with me for so long. But there's some new people here. And if you are new, by the way, click that subscribe button. And I'm going to offer a challenge here in just a minute. I wrote it down today because I'm challenging everybody to something, which I'm going to hopefully have you guys follow me on. Early on, when I started, I was a long-term investor. Right, that was back in the mid-90s. In the late 90s, I took a class at Online Trading Academy and realized I'm missing a big portion of this picture, which is technical analysis and predominantly direct access trading. So what I was thinking when that happened is I need indicators. And there was a point where I literally had 5 or 6 indicators on my chart. I'm talking volume, ADX, maybe CCI, Bollinger Bands, MACD, stochastics, and then price. Maybe throw in RSI too. And the belief system that I had was these indicators are right. They're the ones that are going to help me make trading decisions. And the more that you believe that, the worse your trading is going to get. I'm 100% behind Forex Black Box here who says I'm doing okay without him. Agreed. What you should start doing is remove everything from your price charts. If you guys have noticed my price charts that I use for this show, do you see any indicators on there? I mean, yes, I have volume at the bottom. That's it. I don't really need anything else. Right? I can look at this from a variety of different angles. I don't need to have the indicators on my chart because, let's be honest, if you guys looked at this chart right now, do you need to put RSI on here? Should you put stochastics on this chart? No, because if you know how that indicator is constructed, you know exactly what RSI and stochastics are telling you. I have not added them on here. If I put RSI or stochastics on this chart, they're going to have spiked and got very close to 70 on RSI, 80 on stochastics. They're actually peaked on stochastics at over 80 back on right around the 19th or 20th of April. But now, because of what's going on with price, they're slowly drifting back down towards the center line, which is 50. Don't believe me? Let me go and add them here. Let's go to enable. Where's stochastics? Hopefully, there's fast stochastics. Notice they were up above, they peaked over 80, almost to 100, and now they're drifting back down at the bottom, right near 50. I didn't need the indicator to tell me that. I can look at price and see it. Oh, well, let's go to RSI. All right, we'll just enable RSI on here, and Notice it was almost, so I was wrong. I thought it broke 70. It didn't. It just kissed it, but now it's drifting back down towards 50 because of sideways consolidation. We don't need these pieces to help us make the decisions. It's price that's number one. So always start with a clean, naked chart, not even grid lines, because grid lines will draw you to a level that might not really be important. It's just an arbitrary algorithm that the computer put a grid line at. So if you do that, then you can start to add in things later on. And let's say you're really good at supply and demand. And of course, I'm a practitioner of supply and demand. I've been an Online Trading Academy graduate for many, many moons. If I have a solid system, I can now start adding things to it if I choose to maybe help me support my decision or maybe even talk me out of something. For example, let's say I found a great supply zone on stock XYZ. I'm looking at it and on RSI, it's telling me that it's not overbought yet. Well, that might discourage me or put just a little bit of a dent in my optimism for that trade to rally up to that supply zone. If I have a supply zone identified, it looks fantastic, and then all of a sudden I have my RSIs pegged at 100 or stochastics is pegged at 100, you know what, all of a sudden I'm looking at that going, I've got this thing very overbought and it's in a really strong supply zone. I feel more confident with this trade. So that's the only reason I would use indicators. I think that they help you in analyzing price. But let's be honest, the more charts you guys look at, the more likely you're going to be able to remove stochastics, Bollinger Bands, moving averages, MACD. All that stuff can go away when you just look at price and understand what price would tell you. And remember, this price chart that I have here on the Nasdaq, this is what's important. That is a result of the transactions that have happened and the amount of transactions that have happened. That is it. There's nothing else needed to make these indicators work. Now, if I understand that, then I'm solid. A indicator like RSI or stochastics is simply a derivative of this. It's taking that information that we see and coming up with a lagging piece of information. So anyway, had to share that one with you. All right. Before we end up, I want to get to this challenge for you. It's, I got 17 minutes left. I've been extremely lazy over the past few months. Just felt like not working out, not exercising, not doing anything. And I like to do challenges for myself. So I'm going to challenge everybody. And if you want, feel free to type it in. I'll see if I can hold you guys accountable because I know we've got a lot of regulars here on the show. I want you to think of something that for the month of May, the entire month, that you're going to do every single day. Whether that's, I'm going to do 1 hour of post-market analysis on charts, or I'm going to practice playing the guitar for 30 minutes a day. I'm going to watch German movies so I speak German a little bit better for 30 minutes a day. I want you guys to tell me something that you're going to do every single day. And here's the one thing that I'm going to do. I'm going to try to do more than this, but it's a starting point. I'm going back to doing my 100 push-ups a day. I've done it multiple times, and it feels great when you finally finish the month and you see incredible results. So I'm doing 100 push-ups a day for the month of May. I am taking Fridays off. That's part of my rule. But I'm curious what you guys are going to be doing. Anything that you want to achieve is possible. Pretty much anything you want to achieve is possible. You just have to start off by taking that first step and doing something. So let me know if there's something you're going to commit to, and I will try to keep pressuring you to follow whatever it is as a challenge that you guys want to do. Nobody here really wants to do anything, apparently, because I don't see anybody typing anything in. So I guess I'll be the only one doing 100 push-ups. I'll do 100 push-ups on the show. How about, no, I'm just kidding. I wouldn't torture you guys through that one. All right, so what was some, you're going to do push-ups, plus I try to do 100 burpees a day, which you guys know burpees. If you don't know what they are, look those up. Holy cow, 100 burpees a day was just unbearable. I did 8 days, and it was horrible. Yes, Don Fraun, you're catching the end, my brother. Back trading April. Okay. Cool. Living the dream, my friend. Merlin, just started my new exercise and health program. I need rest between the days, but okay. There you go. It's do something, right? It's just get your body acclimated, and pretty soon you start with 50, then you're doing 100, next thing you're doing 200, and all of a sudden, let's go. I will walk miles a day. Miles? Come on, quantify. Are we talking 1 or are we talking 100? I'm going to go back through chat just so I can see how you guys are doing. I'll do it. I'll work on my book every day. You got a book going, Thomasina? I like that. What's your book about? Maybe we could do a little promo for you on the show. There you go. 2 miles a day for Okinola. 100 days, 100 guest challenge. If you can help me book them, I'm okay with that. That's a tough one. Don, what I was doing is I obviously we talk about markets and et cetera, and obviously that's for the betterment of us as traders and investors, but I was thinking something outside of that. So I challenged everybody to pick something they're going to do for the month of May. I'm going to be doing 100 push-ups a day, which I've done before, and it's a challenge. And by the way, when I say 100 push-ups a day, that doesn't mean I'm doing 100 push-ups in a row. I can't do that. I can do about 50 in a row before I'm about to die. Bottom line with that challenge is you can do 10 sets of 10 if you wanted to, or 20 sets of 5, whatever it is, but you should try to do as many as you can in one set, but over the course of 24 hours, doing 100 push-ups. So it's definitely doable. But anyway, let's get everybody doing something. Hopefully, I work out already, lift 5 days a week. Well, Kevin, you can't do that challenge. And find something else that you want to do. I mean, we all have bucket list things, right? For me, I want to pick up an instrument and play more instrument stuff. I also want to learn German again because it's in my brain. I just can't get it out. So I'll start the month of May with the 100 push-ups, and then maybe as we get to June, I'll say, practice German for 30 minutes a day or an hour a day. But something to get us all going and feeling better. All right, let me go to our calendar here because, we are wrapping up. We talked about volume profile with Mike Siewruk today. Interesting stuff. I think it's just one of those pieces that he's using as the framework for him making trading and investment decisions, and it's great. I found that useful. I would encourage you to check out some information at his site. All right, I'm going to have to read back through this and see who's all on board. I'm going to make a list. I literally have to go back and watch this show to see who said everything. Here's what we had happen for today. Normally, I wouldn't show you too much about what happened today because it's just whatever, it's post. I want you guys to notice a couple things here that was really interesting for me. As we roll through here, you see Europe and their GDP, German GDP, big contraction, but they already expected it to contract a little bit. Notice down here at the bottom, this is the one you're like, holy cow, what the hell happened? Right? You had personal income in the United States month over month increased by 20%. Yes, stimulus checks is what we're talking about here. But it was a 21% increase, and spending increased, but nowhere near the percentage that we saw from income. So this is incredibly positive for the markets. And I wanted to show, I didn't bring it over. Are you kidding me, Merlin? Sometimes I amaze myself at my stupidity. I actually had a chart of it. Let me see if I can bring that one up for you guys here. Give me 2 seconds to bring it up. It's just in one of the folders I had all set for the show. Here is earnings, right? This is, income. Look how awkward this looks, guys. I mean, you want to talk about a world turned upside down. If you go back to 2016, 17, 18, 19, and early 2020, it was a flat line. Personal spending and income numbers didn't fluctuate that much. But holy cow, look what we have now. This is like the single greatest increase in personal income that I've ever seen on a chart, ever. 21% month over month gain. That is a pretty phenomenal increase. So I thought I'd bring that one up today. Certainly the markets didn't enjoy that because we saw a sell-off near the end and really kind of a bearish day. Other part here that I found interesting for today was this. Something to keep an eye on going forward. Notice the earnings for oil. Phillips 66, they beat earnings big time, 17% beat down there at the bottom. You had Chevron, they just barely missed, and then ExxonMobil beat pretty good as well, a 10% surprise, and they were down. Energy is apparently not meeting the expectations that the industry has set. Check out XLE here. XLE today, not looking so good. You had a spinning top on yesterday's trading, and we're in a downtrend since March. This could very easily turn into one of those rallies that just drops XLE down to $46 very quickly. So keep an eye on that one going forward. There aren't as many major oil companies reporting next week, but there are a lot of natural resource companies that are in this space, but not the major players. Anyway, I thought that would be interesting for you guys just because energy has been doing so well, and all of a sudden it's like, oh, well, not so much. All right, lastly on the list here, I've got economic calendar for Monday. This is for May 3rd. You can see there are some big announcements happening, but they will actually be happening on Tuesday morning. This one down here at the bottom, let me grab my pen again, go to the pen. This guy right here, this rate statement for Australia, that is actually happening Tuesday morning right after midnight. All right, so Monday night rolls into the new day, 30 minutes into the Tuesday morning. Australia has a rate announcement. Now, the interesting thing there with Australia and British pound, which also has an announcement next week, is those currencies were really hot and they seem to be floundering. They're just, the strength doesn't seem to be there right now in those two. So we'll see what happens next week. That's some of the major stuff. As you can see here for the U.S. a little bit early on, you've got final services PMI for final services and ISM, factory orders, and then little Miss Yellen will be speaking on Monday as well, which could create some havoc for our market as it usually does. that is it really from the big economic announcement perspective and earnings perspective. If you guys have questions or comments regarding the show today, let me know what they are. You can send them in at TraderMerlin@gmail.com. I do not have any guests slated or scheduled for next week, so I will be working on getting some guests on the program. Some of you have sent in individuals who I will reach out to and do my best to get them on the program. Maybe even get Don Fran, because he's here with us today. And I know he always likes coming on this show as well. All right, that's going to do it for me, everybody. I hope you have a fantastic weekend. Cheers. Do something fun. Our time on this little spinning round ball around the earth is getting shorter and shorter and shorter. So make sure you go do something fun and enjoy your time. That said, thank you guys so much for the support. Hope you enjoyed today's show with Mike Siewruk. You can go check him out at the Daily Market Forecast and hopefully get some great information there as well. Cheers. Have a great weekend. I'll see you next week.